I'll be teaching you a simple concept that you can use to make money regularly and steadily on the charts. You can use it to pass prop challenges. You can use it to increase your equity on a steady base. Using just these four components, putting it all together, I'll be showing you both the pros and cons of the concept and how you are going to use it to achieve success in your trading career. So if you would love to learn this strategy, stay tuned to the end of the video, and even if you have questions, you can drop it in the comment section because I will be replying to you for you to get it properly. If this is your first time in this YouTube channel, my name is Akinwole Victor, aka VstreakFx, and what's my goal? My goal is to make you a consistent and a profitable trader. So without wasting much time, let's get into the chart. The first component which you will learn it today is market structure. You can't take market structure from any strategy you want to trade out there. You can't take identifying where the market is going to, because how will you know where the market is going to without understanding market structure? And what is market structure? I'm sure you've always heard of it, but sometimes most of you trade it wrongly. And what's all about market structure? For a downtrend requires what? Lower lows, lower high. We have the new lower low, a new lower high, new lower low, and before a new low can be formed, it has to break the previous lower low. Meaning that if we have this here, this is a low, before a new low can be formed, before a new low here can be formed after possibly consolidation or anything, it must break the previous low. And where is the previous low? It must break this level. Most of us trade this market structure wrongly. When we have something like, let's say now, market is going here, and the price has possibly created something like this, like this, like this. Then we count this as a new low, and we're looking for to take trades around possibly this area. You can't take out that this is still the previous lower low. This is the previous lower low. You can't take that away from it. And most of us will now get to take the trade around there, and taking the trade around there, feeling like this is a new low, and we get stopped out almost instantly. So you have to understand how you trade the market structure correctly. So okay, there's also this error that I see that people trade the market structure. Let's say you have the trade going in your direction, going in a downtrend. Literally, you yourself can see this is a clear downtrend because we have series of creation of what? Lower low. See how many low? We have two lows here. We have lower low, lower high here, a new lower low, a new lower high, and that's how you can actually trade it. So before we can actually have an uptrend, this must be broken. This previous lower high must be broken before we have a new creation of a high that can become what? An higher high to push the upside. So for most of us make this error of trading it this way. The price is still our lower high, making it still fully bearish. And let's say we have a pullback like this, then we count it as a new structure, and we'll just find out that you are buying here. Immediately you buy here, feeling like you are buying at the low, at a new creation of a lower high. Sorry, easy creation of an higher low. Then putting your stops here, you find out that the price is going to push a little. You feel like okay, and it's going to get to the previous the previous lower high and keep going, and that's how it's going to stop you out. So you need to trade this concept properly when you are trading the market structure. Without understanding of market structure, you can't understand this day trading strategy that I'll be teaching you. You need to understand it perfectly. I'm sure if you've been watching my videos, you know I use gold for my tutorial videos, and I personally trade gold myself. So without wasting much time, let's continue. So these are errors that you should be very conscious of. Same as, let's say, in an uptrend, we have the price creating series of higher high, higher low, higher high, higher low, and let's say the price is pushing like this, that's not created a new higher high, then you now have something like this. Some people looking forward to take the trade at this level, counting this as a change of character, which is totally wrong. And when you are trying to trade it around here, you find out that the price will actually obey you and possibly come and make more lows, making even forming more of like a two-leg rejection and stopping you out almost immediately. Just your stop loss will be somewhere above it. And to just find out that you have stopped down, because this is fully an uptrend market. We have the what? We have the higher high here, we have the higher low here. So the higher low is still strongly what? Bullish. So you see the higher low and it has not been broken. So why will you count this little manipulation here or little correction inside the inside that box as a downtrend? So you have to understand market structure correctly before you can actually trade this strategy. Market structure is very simple. Just label your chart of a series of operation of the higher high, higher low, higher high, higher low, higher high, higher low, and another higher high. And what you want to see when your market want to have a change of trend, it was breaking the previous higher low. When it's breaking previous higher low, it becomes a downtrend, and we have a lower low, and we have a lower high, we have a low high, then we now have lower low, we have a lower high, we have a lower low, we have a lower high, and that's how it runs in the market. So that's the first component. And trading it with the second component, which is support and resistance. You have to understand that support is a level where price has possibly been rejecting over time, somewhere coming. Let's say maybe you have a price here, we have price here, we have some correction here. So this, I'm trying to relate it with the trend. Literally, support means a level where price has been finding it hard to actually push the upside. So I'll be push support a level where price is finding it hard to go to the downside. So we have a price rejecting. So mainly we look for the third touch, but this is support. Then I want you to understand resistance. Resistance is more of like a level where price is finding it hard to go to the upside, where price keep rejecting one, two, more of like at the third touch and looking forward to sell. So combination of this level is called the key level. It's called a key level of support and resistance. So the second component which you need is what? The key level of support and resistance, where price has been acting as both support and has been acting as both resistance. You can see this level, price rejected to the downside here. At this level, price is rejected to the upside. So you can see this is a key level. You can see this place, how price has been dancing and consolidating in this row. That is actually the key level. So we combine these components with the trend, because as market is pushing to the upside, we'll actually go to the example to have an example. You're looking for a place where the market has actually been rejecting for a while. Look for where the market has been rejecting for a while. So at that level there, which is your key level, you have your break of structure, you have your previous higher low. You're looking for this key level to buy to the upside. You're looking for that key level where price has ranging for a while to buy to the upside. And if you are also in a downtrend, you're also looking for that key level here to sell to the downside. So you're also looking for this key level here to sell to the downside. So this is how you can actually trade that support and resistance key level with the trend. So we have the third component. I told you of 4 components. The third component is your candlestick pattern. A lot of people take pending orders, but I am not a fan of pending orders because this is pure price action. I want to see the action of that price. I want to see how the price is playing out. I want to see what buyers and sellers are doing at a particular moment. So that's where the candlestick comes in. You have different kind of candlestick. We have the morning star, we have the evening star, and I have like 4 favorite candlestick. We have morning, evening, We have morning star is for the bullish, the evening star is for the bearish, and we have the bullish engulfing for the bullish. We have the bearish engulfing for the bearish signal. So at these key levels which I'm looking forward to see any of those candlestick pattern. Now look at this place here. I want to show you some candlestick here. You can see this is a morning star candlestick rejecting from a very solid key area here. You can see this is a morning star candlestick. This is a, not to show you, look at a bearish engulfing. Look at the evening star here. So at this key level, you are looking forward to see any of your reversal. You may trade any different reversal candle that you like. So I want to look forward to see that candlestick pattern in this key level to take my trade. This moves me to my last point, my last component before getting to the chart and look at look at few trades, four to five trades. You can just look at 4 to 5 trades with the trend and with this component I spoke about. So we have risk reward. What puts the success in your favor is risk reward. What puts the success is your win rate. So you have to understand your win rate and the risk reward you are trading on. So you want to actually be trading. I love 1:3. As of my student, I always get to hold trades for long. They use 1:2, but I personally love 1:3 in the sense that if I lose 5 times or even lose 6 times and I'm winning 4 times, I should cover back my loss in sample space of 10. So at this area here, I want to look for my stops to have a risk reward of 1:3. You can see this is my risk reward bracket. I'll put my stops above the candlestick that gave me signal few pips, and I'll target a solid 1:3. You can see that 1:3. If I'm buying also, I'll put my profit here, put my stops above my candle, and have a solid 1:3. So I want to do just this, and if I'm able to win 5 trades or we're able to win just 4 trades in space of 10 trades, I should still be crazily profitable. So this is how you trade it. So now let's get into the chart. Now let's identify a clean trend. Okay, look at this trend here. No candlestick signal, and this level was not producing a candlestick signal. The candle broke above it. You can see how we avoided a loss by what? Not taking it. So now look at something beautiful here. Now we have the change of character here to the upside. This is a 5 minutes time frame. Now look at this level where price was holding for a while, and look at this freezer candlestick pattern. Market was almost closed there. I said you put your stop few pips above and target a 1:3. You can see this trade is still on. This one trade is still on. So look at this here. We have our break of structure here, and we have price coming back to this range. You can see, and we have this clear weak rejections. Put your stops. I said you put your stops above the candle a little bit and target the solid 1:3. You can see clean. You need the trend in your favor. You need what they call it. You need your structure, your support and resistance, your key level, and you need your entry candlestick. So let's go more. Okay, look at here. We have a clean break of structure here. So you can see that. You can see we have a clean break of structure here. Now we have a level where price is rejected for a while. You can see this zone. Price has been rejecting here. If I change my line chart, you see that zone. I use line chart also to see a zone where price is rejected, and you can see I got my is it what name of that candlestick? My evening star candlestick with a target of what? 1:3. With a solid target of 1:3. So let's look for more before we call it a day. Okay, you can see the price breaking out here. You can see this is the previous lower high. This is the break of structure here. Okay, looking for a price, place where price is rejecting for a while. So this was where the candle came to appear. You can see that's a strong, wow, it stopped us out. Wow. So we have a candle pips above it, and sadly enough you can see this particular trade stopped us out and pushed to profit. Not still bad. So look at this also here. We have the price here. You can see the breakout structure. We have the price rejecting at a level where price has been holding for a while with a solid engulfing candlestick pattern. Can you see your stops above, and we are looking forward to a solid. This was able to give one ratio 2.7. So you can see how to easily identify trends, how to trade with these four simple components, which is what the first is the market structure, the second which is your support and resistance, the third which is your candlestick pattern, and the fourth which is what your risk reward. So combining all these components, you can achieve a great success every day, increasing your capital and trading with these four clear rules. So if you have any question, drop it in the comment section. If you want me to mentor you personally, kindly use any of my link in the description box. Chat me up on WhatsApp, on IG. I'll get to reply you